Hello everyone, welcome back. This will be the second video uh, introducing our trade report functionality. In this video, we will go through a third-party uh, trade report, a third-party trade record that we upload to our trade reporting system. I will not be uploading a new one because I probably have mentioned in the last video that in order for us to create our trading report, uh, 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 our trading report require much more computational resource to generate the position statistics. Uh, and whenever if you're uploading a report with fairly large amount of transactions, it will generally take quite some time to create the report. So I'll be use one that I already uploaded. As a trader, that we tend to explore different strategies in our trading operations. Sometimes there are a lot of third-party signals or strategies that we want to look into, and quite often that we see some strategy with quite good return or stable return or seems riskless. But whenever we decide to invest in that or apply that to our own trading accounts, we tend to see quite a big, say, floating loss, which never appear on the demonstrated report. Why is that? We will investigate in this video. Uh, First, just the basic reason for that, because I think currently most of the trading commercial trading software, they only track the closed P&L of every single trade, but they don't have the information on what happened during while the trade was open. So it don't have no idea what is the maximum floating profit and loss on every single trade. But in reality, when we trade in the live market, we experience floating profit and loss for quite some time, and it is that floating loss and profit will have very large psychological impact on our trading. So without this information, it is very hard for traders to truly see uh, what's the hidden risk, or what's the pitfall in a just from a strategy report. So in our trading report, in the back end, we recreate the entire market uh, during the whole trading report, so that traders or investors will be able to investigate in every detail about every single trade of that report. So let's go into the detail. I've already opened this strategy because it's a quite large strategy and it takes some time to just open it. So I have already opened it. Okay, again, this first tab is a high level account level performance report. You see that this report seems like pretty seems the whole time, even though there's a few drawdowns, but in general, you make $6,000 in 10 days. And in general, the equity is just keep going up, and it seems okay. But really, uh, in reality, was this the case? I'll just directly go to the point. In our position statistics, as I explained before, that we track the performance of the entire position, and if we first rank by close P&L of the position, you see that for this position number 85, the final P&L was more than $1,000. But during this position, the maximum floating loss at one point of time was more than $5,000. And what happened? Let's look in detail. I think my computer has a memory issue. Let me just refresh the page. Again, my computer is pretty old. So okay, okay. So what happened? You see, this is a long position. This is a long position from this chart. A long trade was placed around the end of July, and as the market developed, more and more long trade are open. And this point, when the exposure reduce, it probably means that this strategy opened a few short trade to net out some of the long exposure, or they simply just close out a few long trade so that exposure reduce. But in general, this strategy is has during this time it has a long bias on the gold. But what actually happening is that you can see during the entire time the market is going down, and the blue line is the institutional order money flow. You can see that around this time and this time, the institutions are actually aggressively cashing out or selling short gold. But while the strategy exactly during this time, they were aggressively adding more long exposures. That's when you see that the float loss quickly accumulate to more than 4,000, or sometimes at some point it's even more than 5,000. So you see that this strategy for this position, the entire time it was going against the smart money. The smart money, they're acting as a counter side of the smart money. It's acting, it's violating the first rule of trading. Follow the big guys. So this is what happened. But when you see, if you just look at the closing P&L, you see, okay, this strategy actually make money. But imagine you are the investor investing $10,000 in this strategy, and within less than 2 days time, you see for 5,000, 50% of floating loss. What is gonna be your psychology? It's going to be unbearable. So it's just so in this case, you know, in with our reporting system, you have an idea of how what's the risk associated with this trading style or this strategy. So you have a much better idea, much clarity on whether you should adopt or purchase a signal or strategy of your interest. Now, going to other part of this report, and there in general there are a lot that a lot of information we can get from this reporting system. I hope this can help fellow traders in evaluating their performance and helping make their in their trading operations. Thank you.